Hey, it's Race Robinson. Thanks so much for checking out the video this week. And I was thinking, what are the big dogs thinking out there? What are the Zillows and the Redfins and the Fannie Mae's thinking? What are rates going to do? What's appreciation going to do? And what are some key data points that I think we need to be looking at? So let's jump right in here. I thought this was a great article from Forbes where they did a mortgage rate forecast for 2023. And they condensed a lot of information where they were showing mortgage rate predictions as of June of 2023. So Freddie Mac just saying rates should decline gently over the course of 2023. Fannie Mae predicting 6.4% by the end of second quarter of 2023. I don't think that's going to happen. By the end of the year, they're thinking rates will be about 6.3%. Bank of America predicting rates at 5.25% by year's end. I think that is very optimistic. And Bankers Association also predicting 5.5% by the end of the year. Now, I don't have a crystal ball. I do think with what the Fed said recently, they're talking tough. They did a skip instead of a pause, meaning that they may raise rates again. And that's really holding interest rates up for sure in the short term. I still think no matter what, as the data comes out and as the year goes on, rates will fall. I just don't know right now with some of the things that they said in the last Fed funds meeting, how fast that will happen. So we'll have to pay attention to the next Fed funds meeting and see if they actually raise rates on this next meeting coming up next month, or do they actually continue to be data dependent? Well, I guess they're always data dependent, but are they talking more like this is a long-term pause, or are they still looking at actively raising the Fed funds rate, which they did say in the last meeting? So this was some key data by Redfin that I thought was really, really interesting. So the median home sales price of 382,861 was down 1%. And when you look at this chart here, this is the median price from the beginning of the year. Look how it shot up here. It just shot up like a rocket. And you can see it usually shoots up around this time of the year, but we're on a stronger course. And it always tends to turn over as we get through the summer months. So we'll really see kind of what happens here. But right now, median price going up, lack of inventory, and kind of more of the same with no inventory. And even though rates are higher, there's still a lot of demand. And the median price really been flat for really throughout the last year, and now really starting to go up again. They also say here that home sales prices declined in 25 metros, and they list some of these markets here that were the biggest declines. But sales prices increased most, and the first two here are in Florida, 8.6 and 8.5% in Miami. Central Florida has also been appreciating. So remember, every market is local. A lot of this data is national. But in general, you're going to get appreciation this time of the year. Market been fairly flat, but Florida kind of leading the field in a lot of our markets on appreciation. The monthly mortgage payment of the median asking price of the median price was $2,628. When you look at this homebuyer housing payment year over year, this really says it all. So as of right now, the average mortgage payment for the median price as of June 18th was $2,628, up from last year of about, let's call it $2,400. But look after that, the people that bought in 2021 and 20, the average mortgage payment was about $1,600 or $1,700. What does that mean? That means that what we've been saying really almost every video that I've done, which is you have all these people at $1,400, $1,500, $1,600 a month payments. They don't want to go up $600 or $700 a month for kind of a lateral move. And until rates fall to a certain point, there's just not a lot of motivation for them to get into the market. And I really like that chart because when you look at it, 2006-28, I mean, you can just see the amount of inventory that's locked up down here where all these people that bought houses over the last few years are here. And then the last year or two, everybody up here. Now, pending home sales down 15.7% year over year. Months of supply was 2.5 months, which is the lowest level in nearly a year, and 4 to 5 months being considered a balanced market. And 32.9% of the homes that went under contract had an accepted offer within the first 2 weeks. Now that's down 36% from a year earlier, but that's still extremely fast to get an offer accepted, meaning when homes are priced right, they are selling in the sales to list price ratio nationally is almost back up to 100%. Again, mean homes when they're priced right, there's demand out there. There's just a lot of people that want to buy. And as rates compared to the inventory, and as rates fall, which again, I think they will as the year goes on. That demand is just going to increase more and more. And some sobering numbers here from National Association of Realtors. Sales numbers were up a little bit, but they said 3.3 offers per sale, which was the highest since June of 2022, and currently 25% waived inspection contingencies, which was the highest since June of 2022. So if you're wondering if we're in a seller's market, we're in an absolute seller's market. And at the same time, affordability is tough. There's an article came out from Lending Tree where it says 57% of people live paycheck to paycheck, meaning that when home prices and rates go up this much, it does lock a lot of people out of the housing market. Now, as of late, there have been more and more programs to come in and help some of that. But as far as the monthly payment goes, there's really no way to help that, as median price is not likely to fall, and rates, even though they're predicted to come down, are not going to come down to 2, 3, and 4%, at least in my opinion, like they did during the pandemic. Hope you find this data interesting. We're going to keep tracking what the big dogs say, because that is a good idea of what's probably likely to happen. Lower rates throughout the year, pretty flat market with a lot of entities. Zillow predicting some appreciation now, CoreLogic, all of them now showing a market turning more bullish, where before they were saying either flat or going down. And then again, really no place for that inventory to come from. So if you have any questions on this, loan programs, or anything I can do to help, reach out to me. I'd love to know. As more information becomes available that moves the market, as always, I'll cover it here. Have a great day. Have a great week. I'll talk to you soon. Bye-bye.